As expected, Bank of Canada has announced a 25 basis point interest rate cut, and they brought their overnight rate back to 3%. And Federal Reserve, they didn't do anything. They kept the rate at the current levels. And we're seeing the divergence between the two central banks is keep widening, okay, which is not really good for currency. And right after the announcement, we saw the Loonie tanked against USD. It's not a surprise because if you are a follower of my channel, you have been hearing from me in series of videos that I am telling you how this is going to crush Loonie, and this is exactly what we're seeing being played out. And they also announced one more thing, that they are ending their QT program. So quantitative tightening program is coming to an end, which means Bank of Canada was actually letting the Canadian government bonds, matured on their balance sheet, and then they didn't actually roll them over. So that program is ending, which means they may perhaps start QE going forward. And they also acknowledge that the Canadian economy is lagging behind the global growth. So we don't have to compare Canadian economy with US, because that's very obvious that we are lagging behind the US quite a bit. But we are also lagging behind the global GDP. The global GDP forecast for the next 2 years is 3%. The GDP forecast for Canada for the next 2 years is 1.8%, and it is revised down multiple times. Even Bank of Canada also revised down GDP forecast recently, and they have been doing it for multiple times. So they acknowledge the economy is slowing down. The economy is literally going through a very tough time. We are not seeing a lot of activity. Even the inflation number that we saw in the month of December, that came down to 1.8%. One of the major reasons is the GST, HST rebate, the relaxation that the federal government announced. Now that rebate was temporary. When that rebate is taken off, then of course the prices will likely to go up, and we will see an uptick in the inflation. When it comes to investing, staying informed is everything. That's why I've been diving into Momo. It's got some tools that are pretty useful for navigating today's market. For example, Momo gives you free access to real-time level 2 market data, advanced charting tools, and professional-grade research. The kind of stuff that you usually pay extra for on another platforms, like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Momo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with. Thank you, Momo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. One of the things that they did not acknowledge is the core inflation. The core inflation has turned its trend upward. They did not acknowledge that in the meeting, but that is another sign that the inflation is still not really controlled. The tariffs are not factored in, so they did not consider tariffs impact in their forecast, because they don't know how to forecast it, because there's so many variables, so many uncertainties, whether this is going to be applied on selected products or across about 25%, or whether the Canadian government is going to apply retaliatory tariffs on the US products. So there's a lot of unknowns, a lot of uncertainty. So that's why they did not factor in tariffs impact in their forecast. So if tariffs applied, then we're going to see a much further deterioration in the economic activity in Canada. As I've been telling you in my previous videos, that this is going to be a disastrous move for Canada if the tariffs are applied across the board. I think the situation is not really good. I don't want to sugarcoat this, but I also don't want to scare you a lot. I think all of us have to take care of ourselves, our finances. So make sure you protect your purchasing power. Whatever cash you have that you don't want to spend in the short term, keep them in USD, or invest into mutual funds, ETF, that is less likely to be volatile. But keeping your investment in Canadian dollar is going to be a bad move, because we're going to lose our purchasing power. Like in 2024 alone, we lost 7% against USD. 7%. So if you had 100K in your bank, you literally lost $7,000. Poof. That's how the currency fluctuation is going to erode your purchasing power. And the policies that I'm seeing from the Canadian government, they're going to announce pandemic style stimulus package that will literally will kill the Loonie if they do that. Not good news at all. And what we are seeing as a response from the government, it's also not helping us. May God help us. This is a tough time economically, and all of us need to stay put and protect our investments and our financial freedom. Anyway, let me know what you think about that. Put your comments down below. And if you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. If you are interested in reading about these topics like macroeconomics, financial markets, what's happening with the geopolitical situation, what's happening with interest rate, monetary policy, Federal Reserve, ECB, China, Japan, I cover these topics in a very simple and plain English in a very digestible format. If you like to read about this, there is a link in the description about my newsletter that I send out every week. Do yourself a favor, click subscribe, and enjoy reading. Thank you. Sorry for the interruption, guys. Just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out.